Madhavi, would you concur? And, we did also see quite a significant impact of Omicron. If we were to say this is safely behind us, perhaps we could look at more improved growth going forward.
No, I think the demand slack have persisted. I mean, before COVID as well, we were supposedly subpar with regard to our, potential growth. And, at this point also, even though it has reached the pre-pandemic level, and still around 6-7% below the pre-COVID growth trend that we were seeing. Consumption remains stubbornly low, while the level of investment also is just about recovered to its pre-COVID level. So I think the divergence between languishing private demand and high core inflation has also been persistent for a very long time in the last 2.5-3 years, which means that domestic supply chain disruptions in manufacturing and services, especially in the informal sector, haven't been repaired fully. So the GDP numbers that you are still seeing are not necessarily capturing the real picture as yet. And that said, even with the current 8.7 plus kind of a figure that you're getting on GDP, which is obviously on account of base effect as well, we are at this point in time still subpar, and we are still growing at least 6-7% below the pre-COVID growth trend. So I think it's not necessarily a very rosy picture. And while we're comparing our growth numbers with the West as well, I think the kind of fiscal boost that those countries have gotten vis-a-vis emerging markets in general, the comparison is quite stark. And India wasn't fully growing in line with its potential in the pre-COVID as well. And currently, in fact, with the kind of the deep-rooted impact that COVID probably would have left into emerging economies, which did not really see the kind of fiscal boost that the advanced economies had seen. I think, there could be a scarring impact of that in labor markets, and which actually would probably show in the medium term in a more startling fashion. So I think we need to be a little cautious before, sort of rejoicing the India growth picture, which is much higher than the rest of the world.
Interesting. Prasenjit, talking about being cautious, inflation, given what we're seeing in crude prices, still continues to be a bit of a red flag. How worried are you about the rate of inflation?
Of course, the current rate of inflation is certainly a worry. And the hope is that oil prices don't stay this high for too much longer, partly because you'll get a supply response from alternative energy as well as from some of the marginal sources of oil and gas, such as shale and tar sands in North America. So as that supply response comes through, I'd expect that Brent crude prices will moderate somewhat by about September, October and beyond. But of course, currently, the very high crude oil prices and broader commodity prices, including edible oil prices, are a bit of a challenge for India in terms of the monetary policy response and the fact that headline inflation is a lot higher than the inflation target. Now, I think it's also important, though, to be aware of some measurement problems that continue with this GDP number. For instance, it's reporting that the fourth quarter private consumption expenditure in India only grew about 1.8%, despite the fact that nominal growth in private consumption was closer to 13%. Now, CPI inflation is currently a lot higher, but in that quarter, CPI inflation was just over 6%, and the private consumption deflator that is being used in India appears to be the WPI rather than the CPI, which is largely inappropriate. You should be using something closer to the CPI as the deflator for private consumption. And if that is the case, then private consumption will be a lot higher in terms of real growth than is being reported in these numbers. So I think there are measurement issues that continue to plague our statistical indicators, particularly GDP. Real GDP, I think, is being underestimated, and this continues to be the case in the current quarter. Now, of course, relative to the rest of the world, India is currently the fastest growing large economy, likely to stay that way this year. That is something to be celebrated. But we are, as Madhavi correctly pointed out, we are needing to catch up because we've had about 2.5 to 3 years of subpar growth, and really growing 8.7% is not enough to make up for that period of subpar growth that we've had. So we need to continue to see rapid economic growth in the period ahead, and the fact that investment spending is picking up strongly is, to my mind, a very positive sign. And of course, in terms of exports, India has seen the fastest export growth of any country in the world over the last 16 or 17 months. In 2021, the calendar year, India's exports grew 41.6% in nominal terms, nominal US dollar terms. That is easily the fastest in the world. So we are benefiting from a global recovery, but in fact, our export sectors are gaining ground, gaining competitiveness, which is, these are the two positives. Exports and investment are beginning to turn around.